Alrighty, everybody, we are doing a review for Wednesday, April 24th. Okay, there's a lot to talk about today. The market really, when you think about it, wasn't, all that interesting. It basically just floated sideways the whole entire day. It kind of tried to put in a little bit of a rally later on in the afternoon, which really wasn't all that great. But then it had basically rolled over and closed on the 50 MA on the intraday. Now yesterday I gave you this blue trend line right here as some potential resistance if the market had opened lower. Well, obviously the market was trading higher today, and so what is resistance becomes support, and so it was trading on this blue trend line, okay, until about 1 o'clock, then broke out and then came into the 50 MA, okay. Because the market has been trading on this blue line for most of the day today, I don't think this blue line is significant anymore. The only way it would become significant again is if we either gap down or gap up and then slowly move towards it. But again, it's not really all that great anymore. It was good for today, and so I'm going to comfortably delete this line, and let's go back and see if maybe we can come up with some more levels into tomorrow. As far as some levels, and I can look at that. These levels are still good, okay. They may not be as good as they were today because we were just so close. We were only about 20, we were between 30 and we were about 40 cents away, okay, from this level, this gap fill right here. And so this lower level is good, but I'm going to erase this gap fill because I think these pivot areas right here are a little bit better now as resistance. And then ultimately this level right here, 159.70, looks like a pretty decent resistance, although I personally don't think we get there tomorrow. And then the support levels are still the same, so whatever I put out in the video yesterday, 156.11 is good, 155.68, and should we trade lower, 154.70 ish. Okay, now let me just see here. There was a little bit of a trend line here, I believe, that I had yesterday. I don't like it anymore. It was only good for today, okay. And today Apple was pretty much the attention child, so to speak. They pretty much got all the attention today, and Apple is just very, very difficult to figure out today. So I think most of trading on Apple today must have been based on luck when you think about it. I tried a little bit of a short here around this MA, which is the 20 MA, and I had a good reason because I had a bearish consolidation pattern. Even though it was within these green candles, it looked like a really good bearish consolidation pattern, and it was because of these kind of wave-like patterns, and I'll explain it. So in the first pattern we tried to break out, couldn't. Second pattern we tried to break out, couldn't, and this pattern was smaller, as you can see. We tried it a third time, and so I was thinking, there's the MA, this should be the trigger for a short, and I entered around, I think, 402.20, around this area right here. I entered for my short, and ultimately I thought we were going to go lower, and I also had this 382 level right here, right underneath it. So I was thinking that this could be kind of a pretty nice level to short, but I wanted to pick up the higher level, and to me the higher level was this level right here. But as Apple was trading in a very strange manner today, right when I entered my short, it broke out. Okay, no big deal. I had my stops in place. I lost only $150, which is negligible, really, when you think about it, because I could have made a lot more. My target was actually down here, and so if my stop is around this area right here, okay, that's okay because I wanted it to go here, and to me this was realistic at that time. And in all fairness, you did have the bearish consolidation pattern, and so it could have easily gotten to the 392 level, but instead it broke out, And I also had a 612 right here. It stalled at the 618 here, but I didn't want to reshort it at the 618 because of the strength that I saw here, okay? And so I was thinking, well, this was a failed pattern, and usually when your pattern fails, that's usually when you need to be on the lookout. So if your pattern, it's one thing for your pattern just to be trading sideways and to not get anything out of it, and ultimately you would move out of it, because why would you wait in a trade that's not moving? But it's another thing when right on the candle, where your entry is triggered, it breaks out against you. And so that's exactly the time, when your pattern fails, it's the same time when you enter it usually. And so the pattern failed, and usually that means that it's going to go even higher, and lo and behold, it went to 411, and then it sold into the rest of the afternoon with the market closing on the 50 MA, which is this blue line right here. But if you were watching my video yesterday, and I think I was discussing Apple in after hours yesterday, and if you're not familiar, Apple had earnings yesterday afternoon, and that's why it's been trading like this really. And so I was talking about Apple here, okay? And this is when I was posting my video yesterday, when I was recording it. And I was saying don't buy Apple here. Why? You shouldn't buy Apple because a lot of these institutions are stuck in Apple and they want to get rid of it. They want to get rid of Apple. Apple is not a good chart. As you know, Apple's been selling since September last year. It put in the high of 712 or something like that, and it's basically lost, I believe, about 40% or something, okay? So it's lost a big share of its value since then. And so, a lot of the things you see now are basically negligible. So I was saying, even though you had this gap up, well, that's great, it's still not 700, okay? And so I said don't buy it here because the institutions want to get rid of Apple, and they're trying to create these perfect conditions so that they would create this false sense of demand, okay? So that people would go in and basically just fight for it and buy it. But what they're really trying to do is they're trying to get rid of it. They're trying to find people who are naive enough to buy it. And if you're somebody who buys Apple for a day or two, if you're somebody who bought it here, and maybe you're thinking, I'm going to sell it here, or maybe a day trade or something like that, that's okay. If you have your technical levels and you know what you're doing, that's fine. A lot of people, a lot of traders make money off of Apple because it is very volatile, and that's what we need. But if you're somebody who's going to buy Apple and hold it for months, okay, that's where you need to kind of draw the line in the sand, because you're not going to gain anything from there, okay? And excuse me. And so all these institutions are trying to basically unload Apple, sell it to you guys, okay? And their earnings yesterday were not all that great. They actually guided lower. And so in essence, you had all these resources where they told you things are going to get worse. That's really what it means. When a company guides lower, that means they're saying, hey, listen, you need to lower our expectations for the next quarter, because we think that within the next 3 months, or whenever they measure their earnings, within the next 3 months things are not going to be as good as they are for us. So they're basically telling you that things are going to get worse. Think about it. This stock is already at $400, and they're telling you things are going to get worse. And so I'm basically just, I don't know, I'm so surprised that people are even buying Apple now. So they basically told you things are going to get worse, but guess what? They're giving you a dividend, and that's why everybody's buying. That's why these people bought here, that's why these people bought here, these people bought here. Everybody's picking up Apple, okay? People just love to trade Apple. Apple is just a regular stock, just like any other. Nothing special about it, okay? You should never fall in love with the stock. And so these people are buying Apple, and more than likely they're going to hold on to it because it's the idea of having the dividend, and I don't know how much of a dividend it is. It might be $1, It might be $5, $10. I don't care how much it is. Okay? Ask the person who bought 3 months ago. Let's go back to 3 months and ask the person who bought 3 months ago, how much does your dividend need to be for you to even break even? Okay? Well, look at the beginning of the year. Apple was trading, let's see, at the beginning of the year, Apple was trading around 550. 550. So for this guy that bought right here, his dividend today, if he were to get one, his dividend needs to be over $150. Is Apple going to give you a dividend that's $150? I don't think so. Okay, so no matter what kind of dividend you get, don't let that sway you. Don't let that persuade you to stay in the trade, because that's really what they're trying to do. And a lot of companies are announcing dividends when things are about to get bad, because they want people to continue holding their stock while it's falling. CVX did the same thing. They announced dividends today, that the dividends were going to increase. So more than likely, CVX is expecting things to get worse. Okay. Now let's go into some of the, whoops, what did I do? Let me just see here. I think I just messed up some of these charts. How embarrassing. Okay. This is the beauty of having a bunch of different screens. Your screens are about 3 miles wide when you actually span them across. Okay, so we're back on track here. Okay, and let's look at FCX copper. And I was talking about this chart yesterday, and I was talking about how this will be a good short, but I didn't like that it had these wicks at the bottom, and I didn't like that it was shooting up. And so I said I would prefer for it to go sideways. So if you see it moving sideways, by all means short it. Well, today it broke out of that pattern that I liked, so this pattern is now negated. I don't like it anymore. And if you want to short FCX, and I think again you should probably more than likely short it than go long, just based on these red sell-offs that we've had, these red sell-off candles. But I think this gap fill right here is your best level, around the $32 level. I think if you get there, let's say within the next, let's see, 1, 2, 3, 4 maybe. I think if you can get there by next Tuesday, maybe even Wednesday, that will be a good shorting level. And you also have this little bit of a trend line, so something in between here. Okay, that will be a good shorting level, but don't short it now. Okay, because this was a very impressive candle, so it might sell off tomorrow, because the problem with copper again is that it has been so weak. So it makes you wonder, this candle, how much power does it hold? And I personally don't think it holds a lot of power. Again, because we've been selling on copper, day after day after day. But at the same time, you have to give this candle some credit, and to protect yourself, you probably now want to short it at a higher level. Okay. Now, some companies, a lot of companies actually are having earnings. Some of them had them today. Now, Akamai is an example, and I'm going to have to go into the after hours chart. Let me see here, 10-minute. Okay. Let's see. There we go. So here's your Akamai. Pretty impressive move on Akamai from about 36 to 42. So look at Akamai into tomorrow to see where it trades. Don't chase the chart. Don't buy it at these high levels. Wait for some sort of pullback. And then another one, CLF, Cleveland Cliffs, is also higher. In all fairness, Cleveland Cliffs has been kind of beat down on the daily recently. And usually when stocks trade lower and lower and lower for this many consecutive days, you have a greater chance of popping. So even though maybe the earnings weren't so great, I don't know, I didn't look at the earnings, but even with these kinds of companies that are going lower, even when the earnings are bad, okay, they tend to pop just based on the oversold condition. Now I want to look at two charts that are a little bit alarming. The first thing is Qualcomm. Qualcomm, another company that's guiding lower. Okay, so Apple's guiding lower, Qualcomm is guiding lower, CVX is increasing their dividends. I'm sure a lot of other companies are doing the same thing. I'm just not paying attention to all of them. Okay, Qualcomm, I don't know why I do this. I don't know why I turn it off and then on again. Okay, let me just see here. Okay, all time. Here's your Qualcomm. Qualcomm was trading at 66. It went as low as 61. Okay, they are guiding lower. Another company is Citrix, a company that's heavily involved in computing and involved with, usually trades with the cloud computing stocks. But Citrix went from 68 to as low as 59. So think about it. It lost $8. It lost over 10%. 10%, over 10%. I don't know the exact number, but do the math. Use your calculator. You'll see it. Very, very alarming. Okay, anybody can see that this is alarming. You don't have to be a technical analyst. It is trading at $60 right now, and I like to compare that to the daily. This is where Citrix is trading right now. Okay, very, very, very alarming. Okay, and the market's not doing anything after hours. I checked. Spiders, same thing. Apple, same thing. Google, same thing. All those companies are trading at the same thing, at the same level. Okay, and here's your support on Citrix. So keep this $56.30, $56.50 level. But usually when you kind of have these gaps, number one, don't trade them in before hours. Okay, that's what I'm saying. Don't trade them in before hours, at least when you're a beginner. It's very tough to do that. Wait for the market to open and then give it at least 5 minutes. Okay, don't trade it into the open. Okay, right at the open. Give it a little bit of time. I don't know how many minutes it's going to take you. You should kind of figure it out. But if it trades around this $56, $57 level, this is not a good support. You want to go lower. So I really don't know how low Citrix is going to go tomorrow, but these are all support levels. $50. I absolutely love this level. I don't know if it's going to get there. It's very hard to predict where a gapping stock is going to trade the evening before the market opens. Okay, but these would be some good levels. You just have to see your relation to these levels when you open up tomorrow. But basically this is horrible. This is very, very bad, and it's one of the reasons why I think the market is going to have a bad day tomorrow. And in my video yesterday I was talking about how we had this gap up here and how the market would probably need to pause a little bit, and so we had that pause today. But tomorrow I think we're going to have a sell day, not only because of Citrix, even though that is pretty huge. I mean, that's very, a big loss in after hours. But I basically calculated that tomorrow would be a potential down day in the markets. And these calculations, I don't go off of charts. I don't go off of any patterns or levels. I go off of my calculator. And so for tomorrow, I just have penciled in that tomorrow more than likely will be a bad day. Best case scenario, you might put in another doji candle. Okay, so maybe we don't get that sell-off, but I just don't see a green candle in the market into tomorrow. Okay, And I think that's pretty much it. Now I just wanted to kind of discuss some things. Oh, I don't think I gave you, did I give you some levels on the spiders into tomorrow? Let me just kind of go over that real quick. I'm very tired today, so I don't even know what I'm doing with my charts half the time. But basically, it closed on the 50 MA, so I would still use this 158.82, and I would kind of cancel out the gap fill. The gap fill here is no longer because we were trading very close to it. So I think this is some good resistance. And then these lower levels are still the same that I had given you guys in the video yesterday. Now, a lot of you are asking me why I put so much emphasis on the SPY chart. And the reason for that is because the SPY really is the market. And so I'm not necessarily telling you that, you know, these are the levels that you should be scalping the SPY, because a lot of you can't afford to do that. The SPY, you know, is a chart where you maybe get about 20 cents out of it, and you know, that's your profit. And so think about it, if you have a share that's $158 and you only get 20 cents out of it, you can imagine you need a lot of capital, you know, to make, I don't know, $200-300 and make it worthwhile. Okay, and so I'm not necessarily telling you these levels so that you can, you know, trade the SPY. I'm telling you these levels because you should coincide whatever trade you're going to take with the large cap stocks, you know, stocks like, you know, Apple, Chevron, Citrix, and all these other stocks that we look at on a regular basis. Your trades of those stocks should coincide with the SPY levels. So in other words, if for example you want to buy you know, Goldman Sachs, and you see a bullish consolidation pattern, well, it would be nice if the SPY chart was also putting in a bullish consolidation pattern, because now you basically have a confirmation to your original trade. And that's the reason why I give you these SPY levels. So, you know, when you reach some sort of level here, when you're about to tag that level, you know, it would be nice to pick up a trade somewhere else that's doing the same thing. Okay, and that's really how you play that. And yesterday evening I put out a video about, you know, timing every trade with the market, and it's available under on my YouTube channel under my Trade These Stocks name. Okay, and so that's where you can find the video, and I encourage you to watch it. Now, it is a general video, so it just gives you a general overview of, you know, what I'm trying to tell you and teach you. And then later on, what I'm going to do when I have more time, I'm going to make a sequel to it. I'm going to make another part to the video where I actually give you specific examples, so you kind of have some hands-on sort of experience with real charts and all of that. Okay, now as a final note, we picked up the VXX yesterday, and we're up by about 10 cents, so that's pretty good, but not quite where I want it to be. And again, tomorrow I have penciled in as a down day, so I might be proven wrong. Anything is possible, but if, you know, I am right, and if tomorrow is that down day, then our VXX should be rocking it tomorrow, and we should be able to make a decent profit on it. And if nothing else, then of course, you know, keep your stops in place, because that's what's really making you the money. You know, you're disciplined to execute your stops, just like my stop on Apple, on my Apple scalp this morning. Okay, all right guys, have a great evening, and I will see you on the charts tomorrow.